lot of people, when they join our group and they're trying to learn how to trade and day trade, they're really confused because they don't know when to go long, when to go short. They don't know where to put their support and resistance lines. And we make it as simple as possible, guys, because there are some patterns that are consistent in the market for 100 years, in the stock market, in the crypto market, in the Forex market. It really doesn't matter what you're trading. They're basic strategies like this one right here. This is a bearish double top. And once you understand what you're looking at here, you'll know what's about to happen. You see, when we have a double top, it means both of the top points there pretty much hit the same point, and it comes down and creates what looks like an M pattern. And M patterns tend to break to the downside 70 to 80% of the time. So when we see an M pattern like this, it's a bearish double top. We're prepared to go short. Also, when you see a pattern that looks like this is a head and shoulders pattern. Why is it named that? Because it's almost obvious. The left shoulder is lower than the head and the right shoulder is lower than the head, and it's even with the left shoulder. That's why it's called a head and shoulders pattern. And head and shoulders patterns are typically bearish, which means that once that right shoulder gets down to an even support level, even with the left side, we're about to break to the downside. And in our group, when we see this, we're prepared to go short. What we have here is a bearish rising wedge. A lot of people see this pattern and they think, oh, this is a bull flag. That means it's going to go long. Nope. A rising wedge pattern almost looks like a bull flag, but instead it's rising and getting narrower and narrower towards the end. So you see the bottom support line is moving up. That's the floor. That's support. The top blue line is going sideways to the right, but it's at an angle upward. So this is called a rising wedge, and these are bearish. So when we see this happening, we know that a break is about to happen to the downside. And what we have here is a bearish expanding wedge, very similar to the bearish rising wedge, except for it's expanding on the end as it's going up higher and higher and higher. It's getting wider and wider and wider. This is bearish as well. So as you learn these signals, you can see that once you can actually print these out, put them on your trading computer and keep them on the side. And when you see these patterns, you'll have a 70, 80% chance of guessing which direction it's going to go because they've already been time tested and proven. This is a bearish expanding triangle or a rising wedge, and they tend to break to the downside 70, 80% of the time. So we just prepare for that. What we have here is a bearish triple top. It almost looks like a bull flag. Bull flags tend to rise up on the left side and then go sideways, creating a flag. But when you have perfectly even tops and perfectly even bottoms, it is a triple top, and triple tops tend to be bearish and break to the downside. We can also have a triple top that is upside down like this. This is a bullish triple top. It's basically an inverted triple top from the previous pattern, except for this one usually breaks to the upside. So, this takes a little time to maybe memorize these or to learn these, but once you have these patterns right in front of you, it becomes easier and easier and easier to see what is about to happen. Here's a bullish expanding triangle. Very similarly, you can see that line on the left is coming from above and coming down, and then it's starting to wind into a triangle that's going towards the right, but it's expanding as it's doing. And these tend to break to the upside. So bullish expanding triangles and bearish expanding triangles. It just depends on which direction the triangle is headed before it breaks out. So these are called trade setups. A trade setup is what you should wait for as a trader. What most people do is they're just constantly going long and going short and not paying attention to the trade setups. If you sit on your hands more, be a little bit more patient, a little bit more disciplined, it's like the lion sitting in the tall grass in the Serengeti waiting for the perfect little gazelle to pull out of the herd that's stampeding by. They don't just run out there and get stampeded by every large animal. They sit there and wait for the right opportunity to strike. And that is what we do. We wait for the proper trade setups, and we wait for these patterns that let us know pretty much what is about to happen. And we just wait for the breakout. When you wait for the breakout, you get a much better entry on your trade. You're more likely to have a consistently profitable trading strategy. The bearish flag is the most common pattern that traders learn when they first start to trading. As you can see, it looks like a flag, but upside down. On the left, that's the flag pole going down, creating that flag pattern. And the green is where it's likely to break out. A bear flag, called bear flag because it's bearish, meaning the flagpole is going down before creating the flag, more likely to break to the downside. And a bull flag is the opposite. It's bullish. You see on the left, the flagpole is going up. That's what makes it bullish. And then it creates a flag pattern. It almost looks like a flag. That's why they call it a bull flag. See how simple this is? You don't need to be a rocket scientist to figure these things out. And bull flags tend to break to the upside. As you can see with the green arrow here, they tend to break to the upside 75% of the time. So if that's true, then you can expect a breakout on a bull flag to the upside 75% of the time. That means only 25% of the time that you might get a fake out where it breaks to the downside. So those are pretty good odds. If you went to the casino and sat at the blackjack table and you had a 75% chance of winning, you would be a consistently winning gambler and you would get kicked out of the casino for winning too much, probably. So if you'd like to learn how these actual patterns get used in real life, click the button below. We are having a webinar coming up here this week, and I will show you live me drawing these trend lines and going live. I mean, literally trading live right in front of your eyes, possibly making hundreds, even thousands of dollars right in front of your eyes using these patterns. And you'll see how they work. And I will explain how they work in real life with real money. And you will see that you can actually do this. So click the button below, get registered, and I'll see you on the live webinar.